Hi, how's everyone doing? Welcome to the TradeStation Masterclass series. The Masterclass is a collection of different topics that we cover on the TradeStation platform. And there's three main categories that we do. We do a technical analysis series, we do an easy language series, and then we do a strategy development series. And it's all about allowing you to get a good grasp on the TradeStation technology and take full advantage of everything that has been implemented there. There's a lot of tools that are on the software that sometimes are not used because of lack of knowledge or lack of knowing how to implement it on your everyday trading. So we do these classes for that main reason. Today, we're going to do a technical analysis class, and it's all on MACD and momentum indicators. Sometimes I do cross the boundaries between the series. So even though this is a technical analysis class, I may give you some tips about strategy trading and also some tips on easy language. And I like to do that because you can see the potential of TradeStation and how you can customize it to become a platform that fits your trading style. So this is a great opportunity for you to ask me questions on TradeStation's functionality, on to refresh some things that I've talked about in the past. I want to make these classes as interactive as I can, just so that you can take or receive the most benefit out of them. Yes, today we're going to talk about MACD and momentum indicators and strategies. Let's go through some disclosures before we jump on to today's topic. Keep in mind that every symbol and idea that I talk about is for educational purposes only. These are not recommendations of TradeStation. Active trading is not suitable for everyone. There are risks associated with trading online. Past historical performance is no guarantee of future results, especially in this class. We're going to be taking a look at strategies and how they performed historically. I want everyone to be aware that what you see that has happened historically doesn't mean that it'll happen like that going forward. There's a link here that allows you to see more details on these disclosures, www.tradestation.com/important-information. If you go there, you'll find all the links associated with the risks of trading online. But it's great to have everyone here. Let's go ahead and jump on to today's topic. We're going to do a little bit of basic information, like a primer on MACD and momentum studies. A lot of this information may be already things that you know, but it's great for us to build that foundation before we move over to the TradeStation platform and go into some of the more advanced settings. So let's go ahead and talk about MACD a little bit. What is MACD? Well, MACD, for those that don't know, stands for Moving Average Convergence Divergence, and is a study that is based on exponential moving averages. It was developed by Gerald Appel, or Apple. I'm not really sure how to pronounce his last name, back in the 1970s. So you can see that the MACD has been an indicator utilized by traders. Back in the 1970s, of course, the individual traders did not have access to computers. So calculating the MACD was something that was arduous, and it was something that they had to do by hand. But nowadays, MACD is part of a list of indicators that are supplied with every trading platform. So all of us have access to the MACD. It is a trend following momentum oscillator. And a lot of times when we talk about oscillators, they are usually not, trend following. However, this is an oscillator that is built based on moving averages. And we know that moving averages by nature are analysis techniques that follow the trend. The more a security is able to trend, the more successful a study like the MACD or moving averages is, because, of course, they're designed to follow the trend. If the market is choppy, if the market is not trending, then that's where these indicators lose their appeal and lose calculated. So yeah, we talked about the relationship between moving averages. These two moving averages that the MACD uses are exponential moving average. Usually, a simple moving average is very straightforward. If you say, I'm going to calculate a 30-day simple moving average, what you do is you take the closing prices of the past 30 trading days and you divide them by 30. That's exactly what a simple moving average calculation is. An exponential moving average is the one that puts a little bit more weight on the recent data. And the reason for that is because you want an indicator that is sensitive to what is happening today. And that's what the exponential moving average does. It's not so much interested in what happened to the prices, 30 days ago, although it's using some of those prices for the calculation, but it's giving more weight to the prices that happened recently, because that's the data that you're going to be reacting on. Not to discount simple moving averages, because they are also a great tool for us to use in technical analysis. But at the same time, a lot of traders would rather make decisions on an exponential moving average because you got more recent data, because it's giving more weight to those recent prices. In the MACD calculation, then we're going to calculate two exponential moving averages, one that uses 12 bars and the other that uses 26 bars. Notice that we use the word bars because in TradeStation, it doesn't matter what interval or time frame you're using, the MACD will calculate based on those two numbers, 12 and 26. If you have a chart that is based on a daily time frame, then the calculations will be a 12-day and a 26-day. But if you're putting the MACD on a 5-minute time frame, a 5-minute chart, you're talking about 12 and 26 5-minute bars. And that's how, whenever we talk about indicators and we talk about how to modify its parameters or its inputs, we talk in the sense of bars, because that's how our indicators look at the data. Again, these are exponential moving averages. And what we do is we take those two calculated exponential moving averages and subtract one from the other. The difference between those two moving averages is what we call the MACD line. We go into a little bit of the math, and I'm very interested in how these indicators are calculated, because it gives me a different perspective as to what is the idea, what is the objective, what is the goal of this study. And it's not until I understand the math behind it that I'm able to tell exactly how this indicator may be sensitive to different market situations. So we have the two exponential moving averages being subtracted, and then what the MACD indicator does, it's going to calculate an additional exponential moving average on the MACD line. This is a 9-period exponential moving average. So yes, 3 different calculations, and what we get on the chart is something that we can analyze in many different ways. We talk about signals that the MACD generates. There is what's called a default signal. That's the one that we have pre-programmed into the MACD. So whenever you use it out of the box, it has its own rules that it's following. And these rules, of course, are going to trigger alerts. Or if you use a strategy that is designed based on the MACD, it'll generate entries and exits based on those rules. So it's important that we understand what are those rules if we want to use a strategy that is based on the MACD. The basic signals, let's go through the signals, and then we'll go over to the indicator and try to identify those signals on a practical example. The signals, okay? The signals are going to be bullish. Here we go. Bullish when MACD line crosses over the signal line. Now remember, we talked about the calculation of the MACD. We know that it starts off with a 16 and a, forget the numbers, a 12 and a 26. There we go. So here we are. It starts off with the calculated value of 2 exponential moving averages, one with 12 bars and the other with 26 bars. That difference between those 2 exponential moving averages is our MACD line. But then we calculate another exponential moving average on top of those values, which is a 9-period exponential moving average of the MACD line. So the signal or the default signal, I'm going to call it a default because that's the one that's programmed into the study, is when the MACD line crosses over the signal line, which is this other moving average that goes along the MACD study. And it's bearish when the MACD line crosses under the signal line. Let's go over to the platform so we can get a visual of what this means. I'm going to go over here to the TradeStation platform. I already have a chart open. This is Coca-Cola. I'm on a daily chart. And what I'm going to do is I'm just going to add my study. Okay, let me go here to studies. And I'm just going to press the M on my keyboard to skip to the M's. And I'm just going to add the regular MACD. All right, so that's my MACD study. Let's go ahead and take a look. Let me move this iPad out of my way because it's driving, the alerts are driving me nuts. Okay, so we have the MACD at the bottom, and what we see is one line is smoother than the other. So if you see the cyan line, that is a very smooth line. By just analyzing the lines, we can see how the cyan one is the moving average or the exponential moving average of the magenta. The magenta, in this case, is the difference between the two exponential moving averages that it uses. Now, if you look over here on the status line, you're going to see the inputs or the parameters that are used for that study. Starts with the 12 and 26, which are the two exponential moving averages, and the 9, which is the length of the cyan line. Now, we give you access to those parameters because, of course, you can modify them. These are the default parameters, but of course, those parameters can change based on your trading style. Not only that, but the fact that you have these parameters or these inputs also allow you to do optimizations and run optimizations in different market behaviors. Because yes, the 12, the 26, and the 9 are the default parameters, but who's to say that other parameters may work better for you? So the fact that we can optimize those parameters and find what works best under certain circumstances is a technology that everyone should take advantage of. Okay, so let's go over here and try to understand some of these calculated values. What I'm going to do, in addition to having the MACD here on my screen, I'm going to go to the Add Studies dialog, and I'm going to add two exponential moving averages so that I can perform some additional calculations. Let's see, moving average, exponential, two lines. There's a built-in study that does that automatically. And what I'm going to do is I'm going to prompt for editing. Notice that this is a checkbox right within this dialog that allows you to go into the settings of the indicator before it gets added to your chart. I find that very useful. Sometimes if you know for sure that you want to change some parameters, you just put a check there so that it takes you there before it goes on the chart. That way you don't have to struggle with finding, how do I modify this indicator? You go right into it. So prompt for editing, I'm going to click OK. And once I'm here on the customize indicator dialog, I can go to the inputs. And what I'm going to do is I'm going to match my parameters of this study with the ones in the MACD. I'm going to make this a 12 for the fast, and I'm going to make the slow a 26. All right. Those are going to go right on the chart. Okay. The colors are very similar to the MACD, but let's not confuse them. What I want to point out is the following. Let me see if I can find an area that is very clear. Okay. We talked about the difference between the two exponential moving averages. Now, if you look at the exponential moving averages right here in my chart, and you concentrate on the areas where the two lines are crossing, that is when the MACD line right here at the bottom, which is my magenta line, is going to be crossing 0. You guys see that? So if the two lines are crossing, that means that the values of the two lines are very close to each other, if not the same. And if you subtract one from the other, the value or the result is going to be very close to 0. So you already tell that MACD line here is going to be crossing either downward or upward on that 0 line. That's just the nature of it. That's the way it's calculated. I just put here the exponential moving averages so that we can understand how this MACD line showed up here in this indicator. Sometimes that enhances the visual, and it just gives us an additional understanding on the technical aspects of the study. Once we have the values plotted, these are the differences of those two averages are plotted right here at the bottom. Then it takes those values and we create a 9-bar average of those values. Everybody follows? If you don't, that's totally fine. If you're only or solely interested in the signals that the MACD generates, that's fine too. Just trust what the MACD is doing. If that's you, then that's totally fine. I like to understand the math And I really enjoy how these indicators come up with all these different plots. So if we go back to the PowerPoint that we were on, it says that it's bullish whenever the MACD line crosses upward across the signal line. We're going to call that cyan line, the blue line, we're going to call it the signal line. And whenever we have a cross to the upside, let me look at one. Okay, down here, let me move the chart a little bit off to the right. Yeah, right here, you can see how the purple line, that's the MACD line, crosses upward above the signal line. That is our bullish signal. Whenever the opposite happens, whenever the purple crosses under the cyan line, that is a bearish signal. And I want you guys to also see that those crossovers that we see here are also aligning with this histogram, because the histogram, all that it does, it's give you a visual representation of the difference between the two lines, the MACD line and the signal line. The bigger the histogram bar, the more distant those two lines are, the bigger the difference. The closer, or even, on the crossovers, is whenever the histogram switches from a positive value to a negative value. So in a nutshell, and in a basic type of definition, the MACD is looking for those positive and negative crossovers to generate signals. How can we tell if this study is a study that makes sense or not? If it's a study that, as a trader, we should be looking at for signals? Well, that's when, strategy trading comes into play, because it'd be great for us to say, use the MACD study, apply to the historical data on this chart, and let me know if it's a sound strategy. Well, let's go ahead and test that right here on TradeStation. I'm going to remove my exponential moving averages because I don't need them anymore. I'm going to remove this information here on the left-hand side. This is account orders and positions. It just means that I traded Coca-Cola on this simulator a long time ago, and it's showing me where I entered the trade. I don't want to see that. So what I do is I right-click on those signals and I say disable account orders and positions. And what I do is I go here to studies and I click on add strategy. TradeStation comes built in, or there are dozens of different strategy components that you can add to your chart. And if you scroll to the M's, I'm just going to press the M here, you can see that there's two that are based on the MACD. I'm going to put those two signals on my chart. One is the long entry, the other is the short entry. That's what the abbreviation here represents. And I'm going to click OK. And as soon as I do that, you can see that my chart lights up with different signals. Red signals are my short entries. Blue signals are my long entries. But the interesting thing is that all these different entries that showed up on my chart are going to align with the crossover of the MACD at the bottom, because they're both based on the same idea. Let's go ahead and open up my chart and take a look at a few. Over here, where my cursor is, we were on a positive value for the MACD, but on the bar where the value here turned negative, see, it went from positive to negative. What happened up here? You can see that I have a red arrow, which represents a short signal. So the strategy is telling me I'm going to generate a short signal there because of the values here of my MACD. The MACD stays negative for a couple weeks, and it turns positive on this bar, which is April 1st. And on the following bar, then we have a long trade. That's a blue arrow. And the signal here is just telling how many shares is trading. Those are just default values that show up on the chart. But another thing that is also very interesting and that I like looking at is how the strategy is performing trade to trade. This is a strategy that always keeps you in a trade. You're always in the market. But if you notice, some of these trades are not good at all. In fact, the last 5 or 6 trades have been losing trades. How can I tell? Because of this connecting line from one entry to the next entry. If you see a red dotted line, you got a losing trade, losing trade, losing trade, losing trade, losing trade, losing trade. So doesn't look very sharp, in the last few trades. However, we're going to take a look at it in other scenarios and maybe other securities. But this is a very great tool, basic tool for me to understand if I had followed the MACD signals to the T and traded them to the T, this is the result that I would have gotten. Furthermore, if you go here to the data menu of the TradeStation chart and you go to strategy performance report, this gives you a full-blown report about how the strategy performed. Of course, this is not a strategy trading class. It's more based on the technical analysis, but they go hand in hand. The only reason why we're looking at technical analysis is because we want to determine if those technical analyses are going to help us or not. And that's why we look at a strategy performance report here to see. I'm going to go to the performance summary. I'm going to collapse the view so that I get a more condensed, summarized view. And as you can see on this chart that goes back, you can see the date range right here. It goes back to 2023, so 6/12/2023 to 6/10/2025. In a time span of 2 years, we made $105, a whopping $105. And of course, this is a strategy that is not keeping, we haven't added the cost associated with trading a strategy. And when I say costs, I'm talking about commissions. Even though nowadays most equities are traded zero commissions, but there's something called slippage. You may send an order and you think you get filled at one price, but in reality, once the order comes back, you're filled at a totally different price. That is called slippage, and we all have to suffer that, and it needs to be accounted for in a strategy. But you can see that this particular strategy in the past 2 years broke even. We had a total number of 33 trades, but the profit factor was $1.03. So for every dollar that we lost, we made $1.03. So it's a break-even strategy. I would say a losing strategy if we were to account for slippage and any other factors that play into the strategy. But one thing, and this is some of the things that we do, or I do as a technical analyst, I look at the indicator and say, what other ways can I look at this indicator and find if I can get better results? Now, of course, this is Coca-Cola. Now, everything changes when you switch to security. The fact that, and this is something important to think about, the fact that we got a strategy performance report that is not so good doesn't mean that we should discount the strategy as a non-working strategy. Because if you change the security, you're going to get a total different performance because every security moves differently. Every security will generate different entries and exits. So if I do a small change, like changing the security to something different, let's do Apple. The strategy recalculates in the background, and I can see that it's even worse when you do it on Apple. Let's see if we change this to the ETF. Spider is also not a good result. If we go here to Google or Alphabet, then same behavior. Is not looking very nice when you look at a 2-year historical backtest. But at the same time, these are great tools for you to determine what a strategy signal should look like. Let's do Home Depot. This is a 1.21 profit factor, a little bit higher than where we were before, but still. The key here is that you can cycle through different securities and see what the default behavior of the MACD favors. What type of securities or what type of movement would actually benefit from having a strategy that generates signals on the MACD. Let me go ahead and show you something else. Let me go back here to my PowerPoint, because another signal would be crosses over zero. The MACD zero line crosses over zero. Bullish when the MACD line crosses over the zero line. Bearish when the MACD line crosses under the zero line. Simple. So now we're not looking at the crossovers of the two lines. We're looking when the MACD crosses over zero. That, of course, is going to give you a totally different result. Can we create a strategy that does that so that instead of generating the trade when the MACD crosses the signal line, it generates the trade when the MACD crosses zero? Yes, we can do that. One of the nice things about TradeStation is that everything is customizable. You can take the default strategy, the default technical indicator, and rewrite it so that it behaves the way that you want. I'm going to go here into the MACD, LE. I'm going to right click on that signal, and I'm going to go here to edit easy language for the long entry. Opening up the strategy gives you easy language. This is the easy language that controls the strategy. And you can see that this is looking at MACD. This is like the core action for the strategy. MACD crosses over 0, then buy. That's exactly what it's doing. But there is another value that I can reference here, which is my MACD. So if you don't want to base the strategy on the MAC difference, but you want to base it on the MACD, we need to rewrite this. Now, of course, I would have to generate a different strategy. I can do that very quickly if you guys want, just to show you how you can modify something very quickly. Let's say, for example, that I go here to File and Save As. Don't make changes to the original. Always go here into a different document. And the way to do that is to save it as a different name. So it creates a copy. And I'm going to call this @MC MACDLE, something that's a very, and @MC, by the way, is just masterclass. That's just a prefix that I use for anything that I modify here inside of masterclass. But if I do a very slight change like this, and then instead of the MACD difference, I just reference my MACD. Notice how quickly I can just copy that name and replace it here. So if my MACD crosses over 0, that's when I want to buy. That's all that I need to change. Let me verify this. Okay, and I'm going to do the same thing with my other strategy. Let me go here to the short entry. So I'm going to right click on the MACD SE, edit easy language, and I'm going to go here to the MACD SE. That opens up the strategy. I'm going to save it as a different one, File, Save As. I'm just going to add the prefix @MC at the very beginning. And now in the action for the strategy, instead of using MACD crosses under 0, I'm going to be looking at just the MACD line. Okay, I put that in there, and then I just verify. I have to click on this green check mark. For those, if this is the first time that you're looking at easy language, it may sound and feel a little bit overwhelming, but let me tell you the truth. It's just the only way that you're going to be able to make indicators and strategies behave the way you want. The verification process here, this green check mark, just checks the code to make sure there's no errors. And if you get a verification successful message, then that TradeStation was able to understand that code. We just made a very small tweak in the code. Let me go back here to my TradeStation. I'm going to go back to Edit Strategies. Let me remove the ones that are there. So no more strategies, because I'm going to add the ones that I modified. I'm going to go here to Studies, Add Strategy. The nice thing about creating strategies or custom strategies is that they're part of the list of strategies that are built into TradeStation. So you can use them as if they were there all this time. I'm going to go to Add MC, and notice that I have the two MACD strategies that I renamed with the prefix @MC. I'm going to click OK, and the strategy goes in. Now, if we want to correlate the signal with the crossing over, we can do that. For example, here, the MACD, this is a long signal. You can see how the MACD crossed from a negative value to a positive value. But notice that we're not aligning with the histogram anymore. We're aligning it now with the magenta line crossing over 0 or under 0. We get the short signal because the MACD line crossed under 0. Now, what type of result did we get? Let me go to Data, and let's go to Strategy Performance Report. Now, for Home Depot, where we had a 1.20 profit factor, it actually made the strategy perform worse. And this is just the way that, the strategy development is. Not every time you're going to get profitable results. In fact, the fact that I'm getting bad results means is that I should probably think about this even further, and maybe I'm just going in a direction that I shouldn't be going. But let's go back to Coca-Cola, which is the original symbol that we were working on, and take a look. Now on Coca-Cola, we were kind of breaking even, but now since we made that change on how the MACD is generating the signal, you can see that it made the strategy better. Now we have a profit factor of 2.06. Of course, the total number of trades is not as exciting. In 2 years, 12 trades, I don't feel like it's enough trades for us to make a sound decision or something that makes us a little bit confident about the performance of the strategy. Because it could have been a fluke, it could have been just outliers that pretty much sent our performance report a little bit higher, but not necessarily something that we can trust going forward. I would like that number to be higher, more like in the 30s or 40s or 50s, because then you have a sizable number of trades that you can say there's enough trades for me to be a little bit more confident. But 12 is not, it's very little. But the reason why we only have 12 trades is because the line didn't cross as many times as we would have expected. If you look at the historical 2 years of Coca-Cola, we had a very significant upswing where the MACD line stayed above zero for a long period of time. The same happened over here when the price of Coca-Cola went down. You see how the MACD line stayed on the negative side for a prolonged period of time. And that's what, determines how many times the strategy trades. Because remember, we're only basing the strategy signal on the MACD crossing over zero, not the crossovers of the two original lines. All right. James, thank you so much. Yes, you need at least 30 trades to have statistical significance. Thank you for that. Yes, we could literally do what James is suggesting, add more historical data, or we can change the time frame. If I were to add more historical data and say, I'm going to do this test on 10 years instead, and I go back here to my strategy performance report, the total number of trades goes up, 88. And of course, we get the performance of 88 trades, which is not as it was when there was only 12 trades. And you can see that the more trades you introduce into a report or performance report, the more balanced the results are going to be because you have more action happening. All right, let's go ahead and go over here to our next idea here on the PowerPoint. Another way that you can analyze MACD signals is divergences. Many traders like to take a contrarian approach to a lot of these technical studies. That just means that if the prices are going up and the MACD line is trending down, there is a contradicting message. There's a divergence and something is due to happen. It's maybe the price activity, it's giving you false signals. It's giving you indications that it may continue to go up and it's losing steam. But a lot of these indicators sometimes give you divergent signals that should be watched. Every trader should say, hey, this is giving me contradicting signals. I need to pay attention to what's going on. Maybe as a trader, I wouldn't base my trading decision on a divergence, but it's something to watch and maybe look at other signals and see if they're aligning based on the divergence message. Some of the limitations, of course, MACD is a lagging indicator. It uses historical prices. Sometimes when we look at indicators, let me go back here to my chart. Even when we look at moving averages, it may be a little bit deceiving when you look at moving averages and where the signal is generated. Let me just add a one-line moving average here for demonstration. And I'm going to make this a 30-bar moving average. Okay, let's see. When you have what I was trying to say, let me remove that one because let me just add another one because in a two-line moving average is something that we need to be aware of because visuals sometimes may be a little bit deceiving. Let me make this a 20 and a 50. Okay, yeah. In a crossover like this one, you may think that the entry is generated exactly where those two lines cross, when in reality, it's happening on this bar up here. So even though the crossover is happening at a certain point visually, that's not exactly where the trade is occurring. It's occurring on the actual bar that correlates to that crossover. The same thing happens here. We had a crossover, but then, the entry would be down here instead of up here. So those type of things that when you look at a visual indicator, you have to look at, and it goes in line with this bullet point of my PowerPoint that, yeah, a lot of these indicators are lagging. The fact that we're calculating an exponential moving average over MACD may result in false signals as well. This is a very quick calculation, but since it's exponential, you may get a lot of crossing back and forth on that line. Let me go back here on my indicator. For example, in this area, take a look. When the price activity of the security is creating a consolidation period, or is going through consolidation, you can see how the MACD signals are back and forth being generated, not giving us a good trend signal. And that's very natural of oscillating indicator, something to be watchful of. Okay. And last is momentum. Momentum is a type of indicator that looks at closing prices starting today and then going back a certain amount of history. Very straightforward calculation, but you can also base strategies around this idea. Let me show you here on my TradeStation platform. So let me remove what I have up here. Let me remove the strategy that I added. And let me go ahead and remove the MACD down here. Okay, I'm just going to go to studies, add studies. And the indicator we're going to take a look at today is called momentum. All right, that should be right here. These are the inputs. As you have, the thing is that what happened is that I checked the box to prompt for editing on the indicator that I inserted earlier, and now I forgot to uncheck it. So anytime that I add the indicator, I'm faced with this customized indicator, which is fine. We can change the parameters. In this case, it's looking at a length of 12 bars. Now, this is calculating what the difference in price is on today's closing versus the closing 12 bars ago. And it's going to be positive or negative. It's going to be positive if today's closing is higher, and it's going to be negative if today's closing is lower. Very easy indicator. Let's go ahead and put it on the chart. And that's what it looks like right there at the bottom of the chart. You can see that the value here is 108. On the positive side, that just means that the closing price today is $1.08 higher than what it was 12 days ago. As simple as that. And you can count the bars and do the math. Right here, this would be bar 0, and we go back 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. And the closing price here is 71.14, which is exactly $1.07 higher than, or lower. I mean, the 112 bars ago was $1.08 lower, so we are on a bullish kind of mode. There are strategies aligned with this study as well. If I go to studies and I click on add strategies, you can go to the M's for momentum. You have two. One is for the long entry, one is for the short entry. And as we put the strategy on the chart, you can see that it aligns with the crossovers. Anytime that the momentum line crosses to the positive, we get a long entry. And anytime that it crosses to the negative side, you get a short entry. Out of the box, strategies that you can test. Now, of course, if we bring up the strategy performance report, let's just go ahead and take a very quick look. We do have a sizable number of trades, 183, but you can see the performance of the strategy is not good at all. Now, that's one of the reasons why we call these strategy components, because as a trader, you're going to be free to mix and match a lot of these trading ideas to have a more robust strategy. Yeah, this is not designed to be traded out of the box. Maybe, yeah, you do decide that you want to use momentum as a strategy to generate signals, but at the same time, you also want to compare those signals with other technical ideas to make sure they're aligned, to make sure that when you do put in a trade, that is founded on information, whatever that information is, not only on one signal, but a series of signals that, of course, lead you to make that decision. Can you modify a strategy to have all these different components? Of course you can. The same place where we went in and modified the MACD, that is exactly the platform that you would use to modify and combine all these ideas. Maybe I want to look at the momentum study, but also combine it with the MACD. If you're both aligned, then I take a trade. But this is a very simple, straightforward formula where it's just basing trades on the crossovers of those two lines. Now, if I were to change the time frame or the security, we already went through this exercise, it would change the performance completely. Not only because it moves differently, but also because the entry and signals are at different levels. Let's go ahead and change this to Spider. That's not so bad. Let's go ahead and change it to a 30-minute chart. When you change it to a 30-minute, it always reverts back to the default amount of data. So whenever you do an intraday backtest, just be aware of that, because I just changed my chart to a 30-minute, but it only gave me about, I believe it's 15 trading days, or I'm not really sure how many, but it's a very small amount of historical data. The reason for that is because just to make TradeStation more efficient and have your chart load up faster. But if you wanted to do an intraday backtest on the same trading idea, just remember to load more data. Let's say, for example, that I want to do 6 months, and I can just type in my request. It recognizes that as a request for historical data. In this case, I'm just typing in 6 months and hitting the enter key, and then it goes back and enters and loads 6 months of historical data. I can see the date range up here. And again, I'm just changing things at random, looking for profitable results, but you can see that that is definitely not the way to do it. So there's got to be a thought process about why you're using a certain technical indicator. There's got to be an elimination process to say, yeah, I don't think momentum is a good indicator for this, or I don't think MACD is that crazy indicator that I thought, because you have an understanding, because you've gone through the exercise of using those indicators, applying them to charts, and realizing, hey, this is not such a good signal as I thought. But if you're able to combine trading ideas and then identify that you're en route to developing this robust strategy, then that's the reason why we provide these tools for you to go through those exercises and find something that you can trade going forward. Okay. That's my MACD input and my momentum presentation. We have dozens of different indicators that you can utilize, same as these, but these are simple, straightforward indicators that we can use right out of the box. Guys, I appreciate the time you spent with me. We do getting started classes on Wednesdays for those that are getting started with TradeStation. And we have the masterclass series where we dive deeper into the technicalities of TradeStation, whether it is indicators, strategies, or even some easy language programming. I hope to see everyone again on one of my future classes. Please check their events calendar for any of the classes that are already scheduled, and I look forward to seeing you there. Goodbye, everyone. Great seeing you. Bye-bye.